Well, I have some good news, and the good news is that this indicator has given trades, and some good trades in the last 4 times. First of all, it only graces us with its presence once every 3 months, so we only get to trade it 4 times per year, and all 4 times in the past it's given a signal. Now, the Japanese GDP obviously stands for gross domestic product, which measures the total output in the Japanese economy. And pretty much what happens is the quarterly number is released 4 times a year. And then the next months after the quarterly number is released, like today, there is also a revision that's posted. So this is considered the preliminary number, and that's the most important one. Next month we will actually get the GDP again, but it's simply going to be a revision of this number. The revisions usually take into account a little bit more data. So right now they have gathered data for the first quarter of 2007, but there's still going to be more data coming in by the end of next month, and as more data comes in, there's possibly going to be a revision. Now, usually nobody cares about the revisions. The revisions are usually very small, 0.1, 0.2%. And when we see a deviation of 0.2% on the preliminary number, such as today, it has much bigger impact on the yen than, let's say, if we had a revision of 0.2% later. So I don't even usually trade the revisions as we would have in June. So I would only trade the preliminary numbers 4 times a year, which is this one. This is by far the biggest mover in Japan. Hypothetically speaking, CPI may matter more, but CPI is a very, very, very stable indicator in Japan. It pretty much never gives a signal. The only time it gave us a signal was when they did a whole revision of the way they calculate the numbers. And they pretty much, Japanese are pretty funny people. When before their CPI was very high, which signified high inflation, the world was putting a lot of pressure on them to raise interest rates, which was a disadvantage for their economy. So what they did is, they said, well, you know what, we'll change the way we calculate the CPI. So they changed the way they calculate the CPI, they removed the most volatile components, and now all of a sudden, instead of having high inflation, they have low inflation. They really think outside of the box. So now they say, hey, our CPI is very low, we have no reason to raise interest rates. So pretty much that's what's been happening with the Japanese economy. Later today we're going to have an interest rate statement out of Japan, but I'm not even going to trade it because usually it takes like 3 hours or 2 hours to trade it because you never know when the statement is announced. And nobody is expecting a hike out of Japan later today because the previous 2 CPI readings have come out actually pretty low. So the GDP, it's a growth indicator, and if it comes out positive this month, it would be the longest positive run in the last 10 years out of Japan, basically meaning that the GDP sector is expanding every single quarter. And they are expecting the consensus to be at 0.7% versus 1.3% previous quarter. Now, believe it or not, but the consensus for this particular indicator are very tight. Most people think it's either going to come out at 0.7 or 0.6%, but there are more expectations rather to a downside than an upside. And because we have such tight consensus, I've literally looked at like 40 different economists' opinions, and I think there's only 1 out of 40 that thinks that sorry guys, let me turn off this phone. So the consensus is very tight. I think out of like 40 economists' opinions that I looked at, there was only maybe only 1 or 2 that think that the number might come out at 0.9%. Nobody expects a number at 1% or higher. So I think a deviation of plus 0.2 should be a decent sell for USD JPY using the regular 10 pips limit triggers. And if the deviation happens to come out at negative 0.3% or more, it would be a possible buy on USD JPY. Now, I've seen this report do different things. For example, last quarter, we saw a big avalanche in price by 50 pips right away. So the price made a move in the first minute. Then the quarter before that, we again saw a move of about 50 pips on a 0.3% deviation, but that one took like 10-15 minutes to manifest, meaning that, you know, initially it dropped by about 15 pips and it retraced by 5, and then it dropped little by little. Of course, it's kind of, you know, it's a lot more to our advantage to see aware that it may avalanche very quickly. We do have a couple of other indicators coming out at the same time. My focus will be on the gross domestic product quarter over quarter, which, as you can see, is here. We also do have the GDP annualized number, which is expected at 2.7% versus 5.5% previously. That number should not conflict with the quarter over quarter because the quarterly number is included in that number. But in case it does conflict due to some other revision or whatever, and I don't think there's any other revisions, but in case it does conflict, the move may be, you know, muted or whatever, so I'll let you know. Another important point is that the reason I'm focusing on this quarterly number is I'm hoping that it's going to come out first. Now, you never know which numbers come out first, but obviously the one that comes out first initiates the move. So, I mean, if the GDP annualized was to come out 2 seconds prior the quarterly number, I would focus on that. It really doesn't make much difference which one to focus on here. However, if for some reason I see GDP annualized pop in before this one, I'll let you know, and I may give an audible buy or sell or whatever. Other than that, I mean, I'm pretty, you know, I'm 99% sure that the quarterly number will come out first. So we covered the regular triggers with 10 pips limits. Basically, try to use slippage control or whatever. I'm going to use actually 5 pips bounce on Owanda for the regular triggers here, and for the conservative triggers, I'm willing to be filled within 20 pips, and I'm going to put twice more money. Basically, the conservative triggers are set up at plus 0.6 or minus 0.6. And the thinking behind that is that if the number comes out deviating at plus 0.6, it would actually be a reading of 1.3, which would match the reading of previous quarter and would be extremely, extremely bullish. I mean, remember that basically Japanese manufacturers have slowed down production of cars because the U.S. economy is slowing down and they don't want to keep producing, and then all of a sudden they have nobody to sell their cars to. So that was an important point that happened there, and you know, and partly due to that and some other factors, we are expecting GDP to slow in the first quarter of 2007 versus the previous quarter of 2006, and we'll just see what happens on that. And on the lower side, if the deviation for the conservative triggers at minus 0.6 or more, it would be a possible buy in USD JPY because the actual number would be 0.1%, and that would be the slowest reading we had since end of 2004. Remember, for the third quarter of 2006, the reading of GDP came out at 0.1%, and you know, that has been the slowest GDP reading since 2004. So if the number comes up at that and matches that or becomes lower than that, I think we may have a quite extreme move on the yen, maybe even upwards of 70, 80 pips. So we'll see what happens. Let me just quickly set my orders up because I didn't do it prior. 15 seconds. 10 seconds. 5 seconds. Okay, came out at 0.6%, no trade, came out almost as expected. GDP annualized came out lower than